Eco Money on Money FM 89.3.
Emissions have continued to slowly increase for equities. Well, that's according to the latest research from London Stock Exchange Group. This despite aggressive targets that we've seen on the decarbonisation front globally. In its paper, Decarbonisation in Portfolio Benchmarks, LSEG aims to unlock key trends and challenges of calculating portfolio emissions. To get the details, we're joined now by Jaakko, who is the Global Head of Sustainable Investment Research at FTSE Russell. Jaakko, thank you so much for taking the time to speak with us today.
Great to be here, Rachel.
Good to have you with us. So first off, I want to talk to you about trends when it comes to sustainability investing. Obviously, we've seen a push towards sustainability over the last, say, 5 to 6 years. And at a time when governments and corporates across the globe have committed to net zero targets, one of the things that I found particularly interesting from the research that you've put out is that emissions for equities have continued to increase, albeit at quite a moderate rate, but they're still on the upward trend. What's going on here, Jaakko?
I think there's some good news and some bad news. I think on the good news front, we see disclosures actually increasing quite rapidly. So companies tell us about their emissions. When we're looking at the FTSE All World, which is a representative benchmark of large and medium-sized companies, both in emerging markets and developed markets, 3 out of 4 companies now give us their data. So that's great, right? I think the second piece of good news is that if we are looking at emissions per dollar invested or looking at emissions per dollar of revenues that companies are making, that is going down. So we see that declining between 2016 and 2022, around 4 to 5% per year, right? Now, that's the good news. And we can think of that in a way that we see relative decarbonisation, right? So per dollar of revenue, per dollar invested, we see emissions coming down. The bad news is that in absolute terms, so if we just count all of the emissions of all of the companies together, they still go up slightly, around 2.3% a year. And I think the other piece of bad news is that, when we're looking at emissions, we're looking at the company's own emissions. If you're looking at the value chain emissions or scope 3 emissions, as we call them, the data is still not good enough to really give us a good picture across the portfolio. So we're not getting enough data from companies. And the data that we're getting from companies is not, the quality of it is not high enough yet to really meaningfully track this on a portfolio basis.
So why are we seeing those emissions go up?
We need to kind of step back a little bit and understand what we're trying to do with this exercise. So we're looking at portfolio emissions, right? And the best way that you can think about that is, how you would look at the sugar or the fat content in a meal, right? So now it's actually quite hard to measure this. And the report that we put out is not exactly bedtime reading. It's quite a technical report, because what we're trying to figure out is to understand, okay, what are the different ways that you can measure emissions in equity portfolios, in fixed income portfolios, and how do these different metrics compare, and what is actually driving them? Right. And so what we see there is that, yes, we can kind of deduce these types of long-term trends, and that works relatively well. But if we are trying to track this in more detail year on year, the metrics are still very volatile. And, in one year, different metrics can show you quite a different picture. Right. So, and in many cases, it's not actually the emissions that are driving these what is happening with the metrics, but it's the financial factors, right? So if we get sector rotations towards more carbon intensive sectors, the emissions in the benchmark go up. If we see a lot of commodity price inflation, sometimes these metrics can come down because companies suddenly have a much larger revenue base, right? So it's actually quite difficult to track these things consistently over time, and that creates problems for how do you communicate these emissions. So if you're managing a portfolio and you're responding either to investors or you're responding the regulator, well, how do you explain that, you have a low carbon strategy, but actually this year emissions suddenly went up sharply, right? And that may not be due to what the companies are doing in terms of actual emissions, but that might be due to how the composition of your portfolio is changing or these financial factors.
So how should investors measure this then?
So we did this report together with the Net Zero Asset Owner Alliance. So this is basically a club of asset owners globally that are committed to measuring these things in their portfolio, setting targets around them, and trying to really drive the transition forward in their portfolios. And I think what we're recommending is one that you shouldn't use just one measure. You need a dashboard of different metrics, and you shouldn't be too focused on what is happening year on year, right? So, but you need to really look at the broader trends over time. And I think this is an evolving science, I think it's fair to say. So we will continue to see metrics evolving, and we haven't really got a strong consensus yet on what is the best metric. And so I think we will see that practice evolving over time, with investors kind of coming to a shared language of, how do we look at those portfolio emissions, and how do we measure them consistently over time?
Looking at the report, was it as you expected, though? As you mentioned, it's difficult to measure. Was there anything else that really stood out for you during the course of the research for this?
I think if we think about what I find surprising in this report, it's perhaps how influential the portfolio composition and those temporary financial fluctuations are in framing that overall outcome. So actually how sensitive these metrics are to these other factors. And that kind of creates that communications problem on, we want investors to do their bit, but what is the right yardstick to measure that? And how do we, communicate that systematically over time?
That's right. It's difficult, isn't it? It does depend on the basket. So moving on, I know that you've come back from New York Climate Week, and we've got COP29 just around the corner, which is when we see global conversations pivot more heavily towards climate, ESG investing, and the rest. What are some of the forward-looking trends then that you're looking at when it comes to, ESG, sustainability, LSEG's emission targets for equities?
COP in Azerbaijan is going to be important, right? It's COP stands for Conference of the Parties, right? So, and the parties here are governments, right? So it's an intergovernmental negotiations process first and foremost. And so both COP29, which is happening in Azerbaijan, and COP30, which will be in Brazil next year, are focused on setting a new set of climate targets. So until now, what we've had of the Paris process is 2030 targets, right? And we've also seen countries set kind of long-term 2050, 2060 targets, typically for net zero, right? What we're going to see out of the COP process in COP29 and COP30 is actually interim targets, so 2035 targets, right? Now, again, those targets are going to be for governments and for countries, right? But they will set a very important policy signal for corporates, right? And most corporates actually, in their own targets, have kind of followed the same structure like governments. So they will have a 2030 target. In some cases, they'll have a 2050 target. What we will now see is companies probably following governments in focusing much more on those 2035 targets, and that will give us a good indication of the direction of travel, both for corporate emissions, but also for countries' emissions.
Wonderful. Well, Jaakko, thank you so much for taking the time to speak with me today.
Thank you very much.
We've been speaking with Jaakko Kooroshy, who is the Global Head of Sustainable Investment Research at FTSE Russell. I'm Rachel Kelly, and I'll be back with you next Wednesday for the last episode of Eco Money on Money FM 89.3.